Hey guys, it's Humphrey. So today I wanted to talk all about the factors to consider for Bitcoin to get to 100K and level up beyond its all-time high of around 66K, which it just recently hit yesterday. So as you guys may or may not know, a big catalyst for the recent all-time high yesterday was the introduction of the Bitcoin futures ETF that started trading on Tuesday. But a big question for me remains, which is how does Bitcoin level up even further? And that's why I made this video. The prospects of Bitcoin hitting 100K has been talked about and buzzed about this entire year, but when I actually look around online, I'm trying to figure out what the actual factors are that could actually get it to 100K. So if you're aware of all the factors that matter and are able to recognize them, hopefully that'll present a buying opportunity for Bitcoin that you can make some money on. The first factor we should really talk about is institutional adoption. I touched on this a little bit at the end of my Bitcoin ETF video from Monday, but a big reason as to why Bitcoin shot up in price this year was to various companies adding Bitcoin to their balance sheets. That and other companies are starting to accept digital payments as currency, so PayPal is actually one of them. PayPal allows you to buy, sell, and check out with cryptocurrencies. In addition, Venmo, which is owned by PayPal, it's a wallet app, but they allow you to buy and sell cryptocurrencies in a super easy and frictionless fashion as well. Cash App is another one of those apps that comes to mind. It's by Square, but they also have features to allow you to trade crypto now as well. As more and more companies buy Bitcoin and other cryptocurrency related assets like NFTs, now if you'll remember back a few months ago, Visa purchased a CryptoPunk NFT for over 150K. I feel like all of these news articles and stories are feeding the narrative of mainstream acceptance of Bitcoin and cryptocurrency. So let's say you started to see more headlines in the news of companies buying Bitcoin to hold on to. That should be a further catalyst for price movement in the future. The other type of institutional buying that would move the needle is the adoption of these Bitcoin ETFs. Hopefully, if you've been watching my videos, we should now know that these future ETFs aren't exactly direct ownership ETFs, which means that the futures ETF doesn't directly influence the direct supply of Bitcoin itself. However, it does give institutions exposure to Bitcoin, so while it's not completely correlated, the fact that the ETF is available as a traditional ETF on a traditional market exchange is a good sign. According to this Bloomberg article from yesterday, the ProShares Bitcoin Futures ETF ended the day with over $1.1 billion assets under management, becoming the fastest ETF to reach $1 billion under management. Now, again, if you watched my last video, so basically I'm telling you to watch all my videos, we actually compared in the last video the assets under management of all the competing products that are available on the market right now. First is the most popular Grayscale Bitcoin Trust, GBTC. Now that has over $36 billion worth of assets invested into it, but again, it's a trust, not an ETF. The second is the Canadian Purpose Bitcoin ETF, which does use the funds to hold and buy Bitcoin directly, and it has $1.4 billion under management. And lastly, there are some mutual funds and index funds like Bitwise's 10 Crypto Index Fund that has a market cap of around $1.2 billion as well. Now that holds a variety of cryptocurrencies, not just Bitcoin though. So that's a really good sign already, that the fact that the ProShares ETF already has $1.1 billion assets under management, if not more by the time of this recording, that kind of shows that it's competitive with the other funds that have been on the market for much longer. The next big factor I really want to talk about is the comparison to gold as a hedge against inflation and the potential that this has on its market cap. According to a deep research report by 2 Sigma, which is a New York City-based hedge fund that uses AI and machine learning to trade, the research report did a risk analysis of crypto assets and found some surprising results that institutional investors could consider. The paper goes on to state that 1, many investors have hypothesized that Bitcoin serves as a protection against rising inflation, given the fact that it's decentralized and isn't at risk of being inflated by the government. And number 2, they actually found that Bitcoin and gold may be on par with regard to inflation hedging. So through their data analysis, if Bitcoin is seemingly a comparable replacement to gold and a, quote, diversifying asset to portfolios with exposure to traditional risk factors, then we could actually see more chief investment officers of pension funds and different types of institutional funds adding it to their portfolio. So gold has an $11 trillion market cap and Bitcoin is right about 1/10 of that at $1.2 trillion. Now it just comes down to volatility. According to this article by Autonomous Capital Management, quote, if Bitcoin is 5 times more volatile than gold, that means a $2.2 trillion market cap for Bitcoin would carry the same volatility risk as does the current gold market cap. All of this is just basically saying if Bitcoin becomes a comparable substitute for gold, we could see the price of Bitcoin easily rise above 100,000 and closer to 116K, especially if Bitcoin gets the same weighting as the current gold weighting in investors' portfolios. That's just basically calculated by taking the 2.2 trillion number, dividing it by the current circulation of Bitcoin, which is about 18.85 million Bitcoins. Now, hopefully that made sense. I think this is the single biggest factor that could really catalyze Bitcoin's price above 100K. It's also fun to note that if more institutional investors pour into Bitcoin, the less volatile it actually gets, because institutional investors are usually going to be more buy and hold versus retail investors are likely more fickle and emotional. Now, more institutional adoption will come so long as it's being done in a regulated fashion, which is the next factor we're going to talk about. In terms of regulation, that's the age-old battle that Bitcoin has been struggling with its entire existence. Because Bitcoin is pretty decentralized, it allows people to circumvent the current financial system and perhaps use Bitcoin for the wrong reasons. A lot of lawmakers and government officials have cited that Bitcoin is primarily used by criminals, and in fact, in the early days, one of the biggest uses of Bitcoin was on the dark web for illegal trade. Now, to understand why governments actually want to regulate it, you simply have to know that it's a currency that can operate on its own without government intermediaries, and that's simply a threat to the existing system. The existing system uses a central bank, the government regulates the use of that currency, and governments mainly want to stay in control to how money flows and is distributed within the world. The bottom line is that the governments are kind of skeptical about a currency that they can't control, and if governments are skeptical, then the SEC is going to face a lot of heat when it comes to allowing products like spot Bitcoin ETFs on the market. So having regulated Bitcoin products is the key to institutional adoption, because if the SEC approves these products, then institutions can then pour money into these products, which should then increase the underlying value of Bitcoin itself. We've already seen a step in the right direction with these futures ETFs, and I know that there are many companies applying right now with the SEC to offer spot ETFs, which are basically direct ownership ETFs. Now, the reason those take longer to regulate or are basically under a lot more scrutiny is that because they're a lot more volatile than futures ETFs. The price of Bitcoin can crash seemingly unexpectedly, and seeing as how many institutional investors such as pension funds have to keep risk and diversification in mind, the SEC wants to make sure that those ETFs can be aligned with institutional investors. I think defining Bitcoin as a store of value is the much better approach to go with. Doing so will categorize it in the same realm as gold or silver or anything that helps hedge against inflation. The next factor that I could see taking Bitcoin above 100K is actually retail adoption. As buying Bitcoin gets easier and easier to do in real life, then we're going to see more retail adoption across the board, leading to hopefully an increase in Bitcoin's underlying price. Back in 2012 to 2017, Bitcoin was still pretty hard to access. You still had to set up a digital wallet somewhere, access it through some sort of obscure, shady website, where the average person did not really want to take the time to research and learn how that process worked. I think we kind of take it for granted these days, but it's much easier to buy Bitcoin, especially in the last year. You can now buy it in one tap on Venmo, or even Robinhood has basically Bitcoin for sale, and setting up a Coinbase account is super easy and seamless. Speaking of Coinbase, if you want $10 worth of free Bitcoin using my Coinbase link, that's going to be below. I just had to go ahead and plug that there. But what I'm trying to say is that people are inherently lazy, me included, and they want the easiest, most frictionless possible way of buying Bitcoin. And the fifth factor I see that could take Bitcoin above 100K is the Taproot Upgrade. In November of this year, Bitcoin should be going through a new optimization on their system called the Taproot Upgrade. If this upgrade does go through, from a technical point of view, Bitcoin is going to be a lot more secure. As this blog post states, right now with the way Bitcoin works, bad actors can currently tell when you're using a multi-sig signature, which are more secure, from a mono-signature transaction, which is less secure. This information could help them do bad things, and Taproot, the upgrade, stops this from happening. Now, admittedly, I'm not the most technical guy out there, but in my research, I do know that the Taproot upgrade is big in the Bitcoin community and was introduced back in 2018, and that many miners have already started to adopt it. In this tweet from Peter Will, it looks like it's guaranteed to lock in probably around mid-November 2021, and it's primarily aimed at improving the privacy of transactions and also unlocking the potential for smart contracts to run on Bitcoin, which should be pretty interesting. So these are the factors that I think are going to be the ones that actually matter in getting Bitcoin to level up above that $100,000 mark. If you'd like links to any of the articles or research reports I've referenced today, I'm going to leave them in the description below for you guys. Now, let me know what you guys think. Do you think Bitcoin hits 100K by the end of this year? Because that's what everybody is talking about. And did I get anything wrong or miss anything in this video? Please let me know in the comments. Lastly, make sure to subscribe and like this video. It really does help the algorithm, and I appreciate you guys being here. I'll see you guys in the next video, which should be on Sunday. All right, peace.